Hello and welcome everyone to Silver Asset of the Day for the 1st of September 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, we have seen hedge funds and money managers, they've increased their overall net longs again in the latest week on silver. More significantly, in fact, than gold, platinum or palladium, we've seen a significant increase in the overall long positions for silver. We've also seen the gold-silver ratio has broken down back below 70 to 1 and the US dollar has broken back below 92 to 1. So all of these intermarket correlations play out really nicely here for an uptick in price action for silver. And we've seen that today with the breakout back above $28.50 per ounce. We mentioned it last week that you wanted to keep an eye on the 26 US dollar per ounce level. That zone was tested 3 days in a row. We continue to see the price action ricochet between that particular level, but hold. And that was really important. As we mentioned, as long as silver continues to close above $26 per ounce on a closing basis, then you want to be looking out for buying evidence and opportunities to reload on this market. And of course, we're up over $2.50 since we tested those zones. In fact, as I mentioned on Gold Asset of the Day, we've been building into our precious metal positions in the latest week, particularly taking advantage of the sell-offs that we saw after the Fed meeting on Thursday last week. And we've been able to just today on Tuesday bank 2,690 points of profit, which in monetary terms for each one lot traded, that's $26,900 US. Obviously, if you're in at 4 lots on a position like that, you've made over $100,000 in just a single week, which many of our members at the Gold and Silver Club have done so. I do hope that some of you have been able to capitalize on the moves here that we've seen on the precious metals, including gold, silver, platinum and palladium in the latest week, because it's been quite incredible, the upside moves that we've seen in just a matter of a few days here. So with that, where silver is right now, it's trading above 28 US dollars per ounce. Look out for the non-farm payroll data that we have later on this week. So often what we're seeing right now is the profit taking starts to occur later on in the week, around the Thursday in the lead up to that. Then you'll start to consolidate in price action, but that major news item can provide some excellent opportunities to reload as long as key zones are held. So you want to be keeping an eye on that major news item for volatility. Sometimes you're actually better off waiting for the dust to settle after non-farm payroll and then looking for opportunities to reload later on in the session on Friday or at the beginning of a new week if you do see the metals under pressure and closing near their daily lows, because often you'll be able to get a better entry on those positions if you just wait, get the initial knee-jerk reaction out of the way, and then look to reload at more favorable prices. That's if you get a sell-off, but we did see a fairly significant breakdown in price on the last non-farm payroll and the one before that as well. It's just something to be mindful of. Typically, if the metals have had a really strong rally in the lead up to non-farm payroll, you can see profit taking on that event. However, we are keeping our core positions on here where we continue to have exposure on the metals. So if we do see breakouts, we can benefit from that price action too. Then as we go into the following week, you'll be going to be preparing for the European Central Bank. The week after that, the FOMC statement. The week after that, you've got the end of the quarter, which is a very specific way to trade those capital outflows where you do see profit taking at the end of September, which you can definitely benefit from. And this is where a research-driven approach, where you understand the cycles in the market, you understand what has happened previously, where the hedge funds, the money managers, the institutions are positioning themselves, will help you a lot when you are trading silver. The name of the game right now is being nimble. So what's happened a lot over the last few weeks and few months is many traders that stacked positions and had quite significant profits leading into the beginning of August, those that failed to bank their profits near the highs there, they then had to go through very significant sell-offs. And in fact, many built higher positions and too heavy, and they ended up giving back all of their profits that they've accumulated over the last 2-3 months here on the metals. And this is where you have to be nimble. It's better to trade than just buy and hold. And this is where a trading mentality will help you a lot, knowing the levels to execute, to buy in low, to also manage to get out at the right times before the banks and institutions start unloading their positions, where you can see very significant sell-offs. We saw it earlier on this month where gold and silver had the biggest sell-off since 2003. So if you get caught on the wrong side of that, FOMOing in, buying too high, you get crushed on those big sell-offs. And that's where a research-driven approach will help you a lot. So with that, that's been Silver Asset of the Day. If you would like to find out more about our research-driven approach, join a community of successful traders, there is an opportunity for you to do so. Just make sure you click on the link below today's report in order to make an application to become a member of the Gold and Silver Club.